This week, why the Federal Reserve is killing Americans' borrowing power. Welcome back to the Industry Leader Update. Spending, housing affordability, and overall consumer demand are squarely in the crosshairs of the Federal Reserve's goal to reduce inflation. Borrowing and spending actually fuel the U.S. economic engine, and as a result, critics are arguing that the actions of the Federal Reserve are having a significant adverse effect on the average citizen's access to credit and loans, thus stifling economic growth and opportunity. Now, this hits particularly close to home for potential reverse mortgage borrowers in addition to traditional mortgages. In response to last week's show on the Fed's pause on interest rate hikes, one viewer commented, "The issue will be how much buying power does the senior have when utilizing the HECM in a volatile market as this? Regardless of the pause in interest rates, we have already seen the impacts with lower than normal LTV tables. It used to be that age minus 10 would give you the LTV percentage, but today it's more like age minus 30. Now, while the Federal Reserve's actions are being aimed at maintaining pricing stability and preventing excessive inflation, the consequences are detrimental to the average American. Today, fewer potential homebuyers can qualify for a mortgage at today's high home prices and interest rates. Now this, the Fed hopes, will drive down home prices and subsequently the average monthly mortgage or rent payment, which also are a key part of the core consumer price index, would be lowered. Reverse mortgage professionals have seen a steady erosion of the principal limit factors, that is, for the federally insured home equity conversion mortgage, the most popular reverse mortgage in the U.S., and that is pushing many outside of having enough money in the loan to retire their existing mortgage's required monthly mortgage payments or to pay off that loan. Now, for example, in March 2022, a 72-year-old homeowner with a home appraised at $450,000 would see an approximate expected rate of 5.25%. However, by May 2023, that expected rate would have likely jumped to approximately 7%. That means their original principal limit factor of 0.454 would have dropped to a 0.381 even at age 73. That means the total available loan proceeds before loans, fees, and insurance payoffs would have fallen from $204,000 to $171,000. That's $33,000 less dollars, or 16% less than he could have qualified for, assuming that the home's value is the same. Now, in markets where we're seeing home values dropping, we have a compounded impact, which is much more severe. Now, despite this unsettling analysis, there are many older homeowners who are sitting on a mountain of home equity, just over $12 trillion, that according to Normalist Risk Span Reverse Mortgage Market Index. But the real rub is, how do we find this cohort of potential eligible reverse mortgage homeowners? And what once worked to attract the prospective borrower may no longer work in today's market. So retooling our marketing and sales efforts will likely require a new approach. Ad hoc feedback from reverse mortgage originators that I've spoken with who are still consistently closing and funding loans tells us that a variety of efforts to combine a steady flow of potential borrowers for them. Efforts such as Zoom webinars on a regular basis for area professionals, public workshops, and focusing and expanding their existing referral recruitment, among others, were mentioned as worthy investments of one time and energy. Now, as this story unfolds, we're going to continue to monitor the Federal Reserve's actions and also their impact on borrowing in America. So stay tuned for more updates, and we'll look to abandon what is no longer working and embrace new ways to attract prospective borrowers in the meantime. Now, what are your thoughts? Leave your comments in the comment section below. And also, if you'd be so kind as to share this week's video, you can do that on your LinkedIn and Facebook profiles. Don't forget, we have a YouTube channel. We encourage you to subscribe. And if you liked today's episode, hit the like button. If you didn't like it, you can hit the dislike button as well. Either way, please interact. And don't forget, each and every week, we have the nation's only weekly reverse mortgage podcast, HECM World Weekly. Apple users can listen and subscribe on iTunes. And by the way, we are now on Spotify. We just got up on there last week. Thanks again for joining us, and be sure to return next week for more reverse mortgage news, commentary, and analysis here at HECM World.